Hey, what's going on, everybody? Welcome back to the channel. So today we're going to be talking about 7 different brokerages that you could possibly use, or investing apps that you could use in place of Robinhood. With everything that's happened, a lot of people have been trying to figure out, like, what could they do? Where could they put their money? So today I'm just going to go down a quick list of different investing or brokerage firms, brokerage apps that you could use to invest in replace of Robinhood. Now, I'm not going to get into my thoughts around the whole Robinhood thing and what happened. I mean, it's pretty clear as to what happened, and it's pretty clear that it's definitely unfair. And I think you've probably heard that enough. So at this point, it's more about, if you're looking to get out of Robinhood and move it on, here are some viable solutions or some viable options that you can use that you might not have to worry about those problems with in particular. So the first one here is Webull. So Webull is probably Robinhood's closest competitor. Now, the difference with Webull versus Robinhood is that Webull does not have any fractional shares, and their platform isn't exactly, as, I guess you say, user-friendly as Robinhood is. The reason why Robinhood appeals to so many people is because they have a very simple, very simplistic, easy user interface that works pretty well with the average investor, the beginner. Simple. You can swipe up for this, you can put this in, and it's not jumbled up. Now with Webull is a great platform, and it actually gives you a ton of information. So it's been really good. I use it personally, and I've got a chance to use it since they actually started to do investing. So Webull is another good option for those that are looking to trade in particular. So now, if you're interested in Webull, there is a link in the description where you can actually get some free stock. So check that out below. So whether it's either my link or somebody else's link, just understand that you can't get some free stock, and you can't get that from just opening up directly on the platform. So make sure you use someone's link. So if you're really interested, get some free stock. All right, so the next one we're going to go to is Fidelity. So a lot of these that you're going to hear have been around for a while. In fact, most of them have been around for a while. And one of the great things with Fidelity and the next set of companies that we'll be going through or just mentioning is that Fidelity has, they've been around for a while. They have a lot of capital, so they can, cover their own, their own costs and things like that. It's a more robust platform. It's more sophisticated, has a lot more options and things that you can work with, which you'll see with a lot of these. Like, you can see the investment products on here, that there's a lot more than just you buying, selling, and option trading or margin trading. So Fidelity is another strong one that I definitely think you should check out. Now, with Fidelity, they actually do have fractional shares. Now, I have reviews of all these that I'm going over. I have reviews of all these on the channel. Some are outdated. Now, when I did a review on Fidelity in particular, they didn't have fractional shares, and they still had a fee attached to it when investing. So you do your own research, but Fidelity doesn't have a fee when you buy or sell your trades or your investments, and they do have fractional shares. So that's pretty cool. So if you're looking to buy things fractional shares, Fidelity is one of the ones you can consider. All right, the next one, TD Ameritrade. TD Ameritrade, very popular, been around for a while, and so a lot of people use TD Ameritrade as well. Same as Fidelity, been around for a while, very stable. And you can check out their platform as well. It don't cost you anything to check out platforms or to sign up to see what they are about and how they function. You can check out their partnering app as well. That way, so you can find, what works best for you. But TD Ameritrade is another viable option that I definitely think you should look into as well. Then you have ETrade. ETrade is great. Now, ETrade actually they're like one of the last ones to get rid of their fees, their transaction fees for trading and or investing transactions. So I'm glad to see that, because they were one of the last ones. But ETrade is just like what it says, ETrade. So a lot of people do use ETrade for a lot of their trading and things like that. It's a good platform, been around for a very long time as well. So check them out as well. All right, now the next one is Charles Schwab. And so simply, Charles Schwab actually owns TD Ameritrade. So now you can see they have a disclaimer here just saying that they listen on Charles Schwab or TD Ameritrade. We didn't prohibit any buying or selling for any stocks or basic options. So understand, like, the issue that was happening with Robinhood was behind their marginal trading. Now, what happened behind their marginal trading is that it affected everybody. So even though I'm not someone that would do marginal trading, or if you were someone that doesn't do marginal trading, they have made it so that you couldn't buy either. Even if you had the money and you had the cash and it wasn't through margin, which is borrowing money, then they still didn't allow you to trade. So what they're saying here is, for basic stocks and basic options, there were no halting. So the reason why there were a lot of haltings, or well, let me not say halting, but the reason why there was a lot of the traction was slowed up was behind trying to cover marginal costs. But Robinhood was the one that had the most traction behind that. So, but we'll talk about that maybe another time. But so Charles Schwab, another great one. This is actually the platform that I personally use as well as like my, I guess you say like old granddaddy-ish brokerage account where I have some of my longer term investments in. At the end of the video, I'll tell you exactly how I have my stuff set up so you can kind of understand. I've been investing for a while, so you don't have to do what I do, but I'll give you an example of how I have my things set up. So the next one is Vanguard. Now, most of you may not have heard of Vanguard, but they're actually a platform that you can invest in. Most have probably heard of them as far as like their ETFs or their index funds, but they're actually a company that you can actually use to invest, in stocks and funds and things like that as well. So Vanguard, that's another good one. OneFinance, I love OneFinance. OneFinance is not a trading one, so this is for long-term investments. Now, with OneFinance, you're actually going to need to, in order to open up an account, it's free, but to start investing, you need to deposit at least $100, right? And once you deposit $100, you're able to open up to investing. So the way OneFinance works is it works with, different, pies, and it's like building a portfolio. So it's a really smart way of investing. So it's kind of like, how you have your 401k. So just imagine you're building a 401k for yourself, except you get to pick all the stocks and all the funds that you want to put in them yourself. So it's pretty cool. That means you're actually able to buy investments fractionally. So you're not necessarily buying a whole, but based off of percentages, you're able to buy, pretty much, whatever you want. So also with Charles Schwab, they also have fractional shares as well. The next one is SoFi. So SoFi has a very simplistic platform, really simple to use, real easy. And SoFi does have fractional shares. And so a lot of people may never have heard of SoFi, and they're a pretty good company as well. Been around for a while. The investing part is like new to their platform, or one of the newest to their platform, along with their credit card you see on here. But the great thing about them is, like I said, it's a very simple platform. And when people use it, they tend to, really like it. Now, is it good for like second to second trades? Like if you're trying to get a certain price right now, I would say no. They don't do necessarily like the on the spot real time trades. It might be a little bit delayed, but if you're buying something short term that you might be able to holding for like 3 to 6 months or for like a week or two or whatever the case is, and you don't rely on that instant second, then this is also a good platform to check out. And I have links in the description below for this as well. I don't know what they're running right now, but I know they are giving some type of, money incentive. Now, a few other ones that I'm not mentioning on this video, far as I'm not showing in this video, but there are out there are like Cash App. And there's another one called Public, which I'm actually doing a review of them this weekend. So Public, similar, easy flow type of platform that you can invest fractionally. So you also have Stash that's out there as well. So you have a number of platforms. You have Acorn. Acorn, you can only invest in funds. With Stash, you have very, very limited amount of stocks that you can buy. So understand with some of these platforms, they're limited. Like in particular, like Robinhood is limited with the amount of stocks you can buy. They don't have every single stock within the stock market. Neither does SoFi. Neither does companies like Stash. So those are some things to take in consideration. But do your research and kind of find what works best for you. As I stated, it costs you nothing to open an account and to just pedal around and see. You don't like it, close the account. And I'm talking about before you ever buy anything or transfer any money, etc. So now the way that I actually have my account set up is I have it set up in two different facets. Now, typically I always suggest people to maybe have, maybe one like kind of, I guess you could say, fun app, and then have something that's a little bit more robust and more stable. So that way, they can put their longer term investments within that. So for example, for me, I have Charles Schwab, and I have OneFinance. So with Charles Schwab, that's where most of my longer term investments are. With OneFinance, there are longer term investments there too, but there's also just mostly like 90% a dividend portfolio because of the way that that works. So now when it comes to short term, I have Webull. Now I don't do a lot of trades, but if I do a trade, I typically do it within Webull. So that's what I use that for. And you can get free stock with that and all those things. So they have a really good platform. I also use that platform for doing some research around stocks as well. They have a really good free desktop version that you can download on your computer. That's really good. You've probably seen a lot of people use on YouTube. So now the other platform that I use also is SoFi. So SoFi is more of my shorter term investments that I might be looking to hold for maybe 6 months, or maybe a year, maybe 3 months based off if it's a run up, or maybe a couple years. But I don't do any trades. So that's how I have my stuff broken down. Now I don't encourage everybody to have 4 like that. Now I have 4 like that for a reason. It kind of happened like that, but for most people you may need just 1 or maybe 2. And so it's okay if you just have 1. If you just really just want to invest and it's basic and it's simple, then you do that. So just to reiterate, just remember that I do have some links in the descriptions where you can actually get some free stock, as well as maybe get some cash. Even like with OneFinance, you open up an account, deposit money, you can get like $30 extra that they'll give you as an incentive, as a referral fee for using my link. So be sure to do your own research, check out each platform. Like I said, take your time, find out what works good for you. And then if you want to get out of Robinhood, then on that particular platform, you'll be able to find where you can withdraw money from another brokerage, and they will handle that side of it. Just check to see if there are any fees for transferring stocks from your Robinhood account. Just kind of check and make sure that there's no fees, and if there are fees, whoever you're transferring to, see if they will cover those fees. So typically what you'll do is you will complete that transaction far as wanting to move from one brokerage to the next on the side that you want to go to. So let's say if I want to use, Charles Schwab, for example, then I'll go on Charles Schwab and I'll say transfer an account, and they're going to ask you for all the information that's needed from wherever you're transferring it from, and then they will handle that side of it. All right, guys, I hope this has been helpful. Don't forget to do your own research, and we'll talk to you in the next video. Happy investing. Peace.